Stock invested for beginners. Energy is down 9.2% year to date from January 1st to June 2nd. Utilities is down 8.3%. Financial is down 4.5%. So which sectors are up the most? Information technology 35.8%. Communication services is up 32.8%. Consumer discretionary is up 22.2%. Like I said before, last year these stock sectors were down the most. Now they are up the most. If you know which stock sectors are going to perform better, you can pick the best companies in those sectors and you can beat the market. Make sure you only choose companies with really good business. Their revenue is going up, their net income is going up. That's what you want to do. There are 11 S&P stock sectors. Usually information technology, all these three perform the best over 5 years, 10 years, 15 years. Energy, they don't usually perform the best because they require high investment, high cost. So it takes much more to break even and make profits. Why is it important to know how to pick stocks? S&P 500 is up 8% this year, but most stocks are down. So if you just buy any stock that you see online, that you hear from your friends, you could most likely lose money. Most stocks are down. You will be better off buying S&P 500 or Nasdaq. Hold it. Your returns gonna be better than most people's because most people don't know how to pick stock. So how about 3 stock markets and my portfolio return? Nasdaq is up 25.56% year to date from January 1st to June 2nd. It's gonna be this line, Nasdaq. And S&P 500 is up 10.61%. This is gonna be this line. Russell is up 1.72%. This one. Dow Jones is up only 0.3%, so it's nothing changed. How about the first line? It's my portfolio. I pay stocks. I use options very much. You will see my portfolio has been up ever since at the beginning of the year. Up. This one went down, but support level. Look at the Nasdaq. I never went lower than Nasdaq. My portfolio jumped up and I went down again because I did some experiments for my students. As a teacher, as a mentor, I need to do experiments so that I know new ways to make more money in options. Look at that, my portfolio is up again. So 36% versus 25%. What's the difference? If you invested 10,000 at the beginning of the year, I would have made 3,600. If you just invested in Nasdaq, you would have just made 2,500 if you invested 10,000. So basically it's 1,000 different. So you might ask, oh, it's not so much difference. So how long does it take to double the money? If your return is only 25%, it takes 4 years to double your money. But my return is 36%. So it takes only 2.5 years to double my money. That's a big difference. I retire in 10 years before the age of 30 years old. So if I had known this earlier, I would have retired by the age of 25 or maybe 23. You see the difference. Warren Buffett is a billionaire because he invested at the age of 11. Remember the power of compounding. Remember the power of time value. The sooner you start, the better it is. The more time your money has to compound. It's very powerful. Today we're going to talk about year-to-date stock market gain analysis and 3 stock market predictions for June. And that series is rates. What is next? And what could crash the stock markets now? I could see one reason that could crash the stock markets temporarily. And AI stocks are up. Could they go up more or could they go down? Should we buy or should we hold or sell? 3 stock comparison at the end of the video. I already talked about year-to-date stock market analysis. Last year, Dow Jones performed the best. This year is the worst. Nasdaq was the worst last year. This year is the best. That's the way it is. There's always a cycle, but over the long run, Nasdaq performs much better than S&P 500, Dow Jones, and other stock indices. Next, we're gonna look at debt ceiling. What could be the implication for stock markets? And we're gonna compare 3 stocks and which one could be the best. Next, I'm gonna talk about 3 stock market predictions for June. There's one thing that could crash the stock market. Then we're gonna look at AI stocks and compare 3 stocks and look at their return. What is the best stock and what stock I like and what stock I don't like. Historically, June is not the best performing month for the stock markets. It's only 0.7%, and September is even worse. But there are 3 reasons that I'm bullish on the stock markets, and those are my predictions for June and the rest of the year. Usually, the 3rd year of the presidential cycle has been the strongest for S&P 500. Average return about 16.8%. The percentage of times positive for the year is 89%. That's a very high percentage. Wait, look at the next one. Year 3, if negative the year before. Last year, it was a negative year. S&P 500 was down, Nasdaq down, almost everything was down. And year 3 is positive 100% of the time. If that happens, this is a year 3 of presidential elections. It's gonna be positive 100%. That's what it means. And average return is about 24.6%. That's why I was so bullish last year. I was buying so many technology stocks, communications, consumer discretionary. Now all I need to do is just wait and travel around the world, look at my stock portfolio going up. Remember, when everybody is scared, that's the time you should buy. Never skip a down year. Never let an opportunity go to waste. Another reason, returns following 5 largest market declines, they have been positive for 5 years. Look at that since 1929. If you think you miss out, don't think about that. You still have 4 more years of return. This year hasn't ended yet, so you still have a big chunk of return that you can capture if you start investing right now. If you are just starting, you can open a stockbroker account. The link is down below. Get bonus after opening an account and making a deposit. The first year after low, 70.9 average return. Second year, 12.7. Third year, 9.8. The fourth year, 26.3%. Fifth year, 10.2%. Look at that. Average annual 5-year total returns is 23%. This is the time to create wealth. This is the time to take risks. This is not the time to be scared. Because after 5 years, you never know, the stock market could go down again. The best time to start was last year. Today is the second best time. Number 1 reason that I'm so bullish on the stock market. High net worth investor hold record cash. This video came out 2 days ago, June 1st. Just imagine, if you are a rich person, you miss out stock market gains. Do you think you gonna just wait for the next 1 year or 2 years? If you keep seeing the stock market going up every day, fear of missing out kicking, then you're gonna be so afraid that you're gonna put so much money into it. Billions are gonna go into stock markets. So don't wait. Not every rich person know how to invest in stocks. So all these high net worth investors, they don't know how to make investment. They just listen to hedge funds. They just listen to the news. They are so afraid to put money in the stock market. But smart investor, Smart rich people like us, we invested in the stock market since last year. We still keep investing. Now I'm just holding my portfolio using options to make more return, getting dividends. I was buying a lot last year, but this year I'm just buying when I see the value stock. Always buy stocks when they are the value. Next, we're gonna talk about debt ceiling and one thing that could crash the stock market. Then we're gonna look at AI stocks. Should we buy, hold or sell? And we're gonna compare 3 stocks return. US has 31.4 trillion debt right now. You can pay down the debt as long as your economy is growing, you are taking more revenue, your productivity increases. That's why US has been raising debt ceiling so many times. The same way for personal finance. If you keep making more money, you are able to pay down debt. There are only 2 ways to pay down debt and get financial freedom. Reduce spending and increases your income. There is only so much you can do to reduce spending. You can never reduce your spending to 0. So what you should think about is to increase your income. There is limitless. You can make millions, billions, or even trillions. As long as you are productive, you give value to the society, you increases your skills. Always learn high income skills like stock investing, option trading, real estate investing. President Joe Biden says this is a big win for bipartisan debt ceiling. It's right. Usually for the past 10 years, there was always a concern about government shutdown. There was a big delay, government shutdown for 1 week. No museum, no government services. They go holidays, but this time is pretty fast. I was expecting that the debt ceiling would delay, so then there's gonna be a stock market crash that I could buy more shares. But this is good news. It's good news for American economy and global economies and Americans populations. So what happens if there is no agreement on the debt ceiling? If there was no agreement in time, US could default on the loan. In that situation, it will be catastrophic. A lot of people gonna lose their jobs. There will be global recession, market panic, and millions of people could lose their jobs and global implications. If US default on its loan, the stock market could crash and land the stock market, Singapore, Korea, Japan, China, everywhere, Germany, Europe, everywhere's gonna have panic, and there's gonna be recession in US and global recession. Millions of people gonna lose their jobs, and especially when risk-free rate is based on US. Risk-free rate means if you buy US debt, you don't need to worry about it. The risk-free rate is very low. If US default on the loans, that's not gonna be true anymore. All the financial modeling finances that we study in university, it's gonna be a mess. And if US debt costs more, the other countries' debt's gonna cost more. The cost gonna increase for the global economy. So are we out of the woods yet? But there's one thing that we need to be worried about. Fitch wants it could stay downgrade America's credit rating despite debt ceiling resolution. Why? Because if US politics is not stable, if 2 parties could not agree in future, US could default on the loans. So there is a risk. As long as the both parties are able to resolve quickly without much long negotiation, without drama, Fitch not gonna downgrade America's debt rating. Of course, Americans have to be more productive, has to be at the top. US economy has to keep growing. If you are not making more money, if you are not growing, that you can pay down debt. So remember, productivity is very, very important. So how many presidents raised the debt ceiling? Who raised it the most? US president raised the debt ceiling 42 times in recent history. Donald Trump 2 times. George W. Bush 4 times. When George W. Bush started in the office, it was only 2.8 trillion, but he left the office with 4.1 trillion, so twice the amount of the debt ceiling. Bill Clinton only raised modest 44%, which is not bad. He raised 4 times, but his debt only grew 44%, which is very, very modest compared to other presidents. 4.1 trillion when he took office, 5.95 trillion when he left the White House. So the economy was growing pretty quick during Bill Clinton time. George W. Bush raised the debt ceiling by 7 times. When he took office, it was only 5.95 trillion US debt, but it jumped to 11.315 trillion, double, because there was a war. Whenever there is a war, US needs to print a lot of money. They need to borrow a lot of money to finance the war. And Barack Obama 7 times. When he took office, it was 11.3 trillion. When he left office, it was 18.1 trillion. Ronald Reagan raised the debt limit the most, 18 times. He took office 9.35 billion in debt. Then when he left office, US had 2.8 trillion, 3 times. Ronald Reagan believed that US government can withstand high debt, so he raised the debt ceiling 18 times. Which president do you like the most? Comment down below. Let's look at 3 stocks. Nvidia stock is up 174% year to date. AI stock is up 191% year to date. And you might think AI stock is better than Nvidia stock. Think again. Let's look at 5 years. AI stock is down 73%. Nvidia 5 years is up 499%, 6 times the money. So if you invested 10,000 5 years ago, your money will have 6 times, become 60,000. And let's look at AMC. AMC, it was up. If you had bought it, you would be a genius. But over the long term, 5 years, AMC dropped 69%. Remember, a good company has good stock returns, so always buy good companies, great companies at undervalued price. Nvidia is a little bit overextended, overbought. If you look at ISI, it's overextended. Look at Bollinger Band, it's at the top, so it could drop a little bit, but Nvidia is a good company. A lot of hedge funds investors are trying to get in, so it might not drop all the way. But AI, it could drop. AI just reported bad earnings. They were not making money, so it dropped 7.09% in 1 day. Over the 2 days, it dropped a lot. So you see, it was overextended that it sold off. Never buy bad stocks. Remember, invest in great companies. Invest for the long term. You will do pretty well. And learn how to pick stocks and use options to double or triple your return. Comment down below if you have any questions. Get free stocks. Like, share, subscribe. Do you want to retire early? Do you love freedom? Do you want to work only 1 to 2 hours a day while traveling around the world and spend more time with your family? You can start stock investing and option trading right now. If you want to know more about finance, stocks, options, real estate, crypto, check out our playlist. Stock investing, stock trading, option trading, real estate, cryptocurrency.